Welcome back to Price Discovery. We're here with Alex Markle, Mike Matanga, me, John Cottrone. We've got a lot to talk about. A month has happened in a week, and excited to get into it with everyone. So let's jump in. I think the best place to start is equities and the carnage that happened in memory stocks and Korea and Leopold. So let's go over to our own in-house Leopold, Alex Markle. No relation. No relation.
I mean, he does have a German name, right? Yeah.
He was born there, actually.
He's got the hair, the eyes. He's a traitor.
Yeah, I'm not sure if that's a compliment or not. Yeah. I mean, the guy apparently blew up, right? I think that's what it comes down to.
Is it a blow up though? Let's be like, did he blow up or did he get margin called and sell a chunk of his portfolio?
Yeah, it seems like his prime broker was Goldman. He apparently was over levered on illiquid names. I think that was the main issue, and Goldman probably increased their margin requirements on like some of his positions, and that then turned into like some liquidity crunch for him, which kind of meant like he needs more margin for his positions. That's why he started asking around. Like first went to his LPs, like no one seemed to, want to give him the money, and yeah, then he had to reach out to the big boys. Basically, had to go to Citadel, Jane Street, apparently, like who was invested in situational awareness. They declined apparently, and it seems like Citadel like got the deal in the end, and no one really knows like at what prices they bought his portfolio, but like speculation seems like was like 10 to 15% under market value, which means like they printed a couple billion on this single trade.
Kenny Griffin does it again. Yeah, the market was starting to bleed last week. These names that he was holding, and if the rumor mill is that as he was shopping this around, as you said, that information was leaking, and people were starting to short or exit these names, which makes sense. So yeah. All right. So the question is, well, now what? Right? We got the like liquidation, and then the rebound, and I think we all bought the blood. We're up probably 20% without leverage. So now what?
Yeah, tough one. I mean, the trade itself was like, at least from my point of view, was quite easy to take, because on like these memory stocks, they just got hit so bad. It just didn't really make sense anymore at some point. So you just had to step in. And then yesterday when the market, when it became clear that there was this one big fund and probably like a few smaller funds that had blown out, and retail on the back of that also that got totally crushed. Like 2 million retail accounts in Korea liquidated. That's like 5% of the population. Then you just, it's the same as in crypto when you get like big liquidation candles, when 20-30% of OI is wiped out in some ridiculous downward spiral. You just have to close your eyes and step in. Just buy this thing, and don't worry if it goes down a couple % more. Like, you're most likely gonna get rewarded for just providing the liquidity at that point. But yeah, it's kind of played out like very quickly, right? We had the large sell-off over the last couple of weeks, bottomed yesterday, and immediately bounced like really hard, like 20-30% on all of these names. And now we're in a bit of a weird spot, I would say. I think like the selling to the downside has obviously been like very inefficient, I'd say. It's it's been like mostly retail selling, and mostly forced selling from from Korean retail, basically, on a lot of these names. So I think the relief bounce probably has some legs. So yeah, I wouldn't be surprised if we see a bit more recovery from here. That being said, we do have some overhead supply in the name of Citadel, who are sitting on like this gigantic book, and they're what, like 20-30%, mark to market up on all of these names, plus the discount they got on top of that, so they're up like 40%. Like a 20, 30, 40 billion book. So that's obviously a lot of like sell pressure that the market is going to see again over the coming days. So my expectation would be like momentum to the upside is back. Like we are seeing a very strong bounce. I think this bounce is going to continue for like maybe the next 1 or 2 weeks. However, there's some supply that the market has to eat through. So I'm expecting very grindy consolidation-esque price action from here. Probably gonna range at these price levels for a couple of days, then go a little bit higher, I would say, once we've eaten through that supply, and then we can sort of reevaluate if we're like if we're gonna see a actually sustained recovery and like go back to the highs. Like that's like I see that as relatively unlikely, or if we gonna keep the downtrend and retest the lows, basically.
I like that. Michael, what are you saying?
Yeah, I have to agree. I think there's a lot of similarities, as Alex said, to crypto. Yeah, even funny enough, I was just doing some research on Leopold, and he actually has links to FTX, part of like altruism sort of thing, and met Sam through there. So I find that quite ironic that he's sort of like top of the headlines around this thing. But yeah, I think the other sort of like scary thing to, usually in market cycles, you do sort of like get this, you get sort of like these big losers, these very, very public losers. And I think, this situational awareness and the situation is one of those things. And it's sort of the key parts of, I guess, like bear should essentially be coming. I think this one will more likely be more to it does seem like we've seen the best there. And yeah, I think you do have to be cautious. You've had this very, very aggressive bull that's been taken out of the market now, and you've got someone, as Alex was saying, Citadel, which just have this huge position that they are likely to, they're going to have to sort of like unwind this thing. They don't want to have sort of this very strong delta exposure. They basically find themselves in a similar situation. So yeah, I think you've got to be a bit cautious in terms of where how far this market or bounce is going to go. I think it's just figuring out, where does this thing break market structure? And I think for it to do that, it's going to be a really, really difficult. So yeah, I would say, just, ride this out for a little bit longer, but as soon as you start to see some form of like market structure break, some unusual activity, then, it makes sense to sort of like take profits. If I also would suggest, it's not a terrible idea.
Yeah, yeah, to me, I have a hard time. I think it makes a lot of sense when you basically buy the liquidations. Makes a ton of sense, and then once it mean reverts, I have a hard time holding it. Like especially these single names, these like high flyers, these high vol names like SK Hynix that we pulled up. I'm much more comfortable in spot and the names we mentioned last week, which is just kind of pick your favorite, like Tesla, Google, commodities, gold. Because I know it's going to be super volatile between now and the end of the year, and I know that like I feel strongly those are going to be up over 5-6 months, or at least till the midterms. But man, I know we're just going to get more vol, more wicks, more liquidations, and so I would not want to be holding something like SK Hynix too long. Like Alex bought, so I bought just for the FOMO insurance, and I'm so glad because I bought a tiny bit, but I was total zen because I bought a tiny bit. So I'm glad I did. But yeah, like I probably want to. I'm already thinking of like offloading that because like there's going to be more shoes to drop, more bodies floating to the surface. There's like everyone's still feeling real good and euphoric, so like I don't think people are buying the dip with spot. They're buying the dip with like 3x leverage, would be my guess. So I think this is one of these markets where like I think we're just going to be super high vol. So I'm interested. Let's talk about options later. I think it's going to be choppy, and we're just going to get more of these liquidations, and I think you buy them, but then you sell it once it kind of comes back to the mean a bit, because and we'll talk about macro, but the macro is not as supportive as it was even just a week ago.
Yeah. Difficult market, like maybe not difficult, but I think if the obvious trade has sort of already sailed, right? Like the obvious trade was like 2 days ago,
Yes.
and now it's
you're
kind of
exactly.
looking at like the markets, like all markets, and you kind of scratch your head, and it's really tough to figure out what to do from here. Also, like dispersion is like so huge across like most like US stock names. It's really crazy. Like you see, Google, which you mentioned, I think like 2 episodes ago, like doing quite well, and then like Apple, for example, like not like selling off really extremely after earnings, and then you have like Microsoft, which is just like going crazy, and Amazon. It feels like the market is just completely all over the place. I think no one can really wrap their head around what's actually happening, where we are in this cycle. How is this capex thing gonna turn out? Are we in trouble? Is everything fine? Like I think no one actually knows, and that's why the market is all over the place.
That's why I think the quote unquote trades, it's really, unless it's a liquidation or something that you just know is way too, like Google last Friday. It was just like it didn't need to be selling off that hard, and that was a name I liked, and so I loaded up. And I don't know, it's up like 5 or 10%. Like unless you get setups like that, I think the best trades are going to be over months and quarters, not days and weeks. And maybe that's just my bias, but You have to bet on things that look through the day-to-day headlines and politics. So that's why I feel stronger with like, okay, AI is real. Like pick your horses. Inflation is here to stay. And so, money printing and negative, like all this stuff is here to stay. So to me, that's why things like, all right, pick your best AI name, pick your best debasement trade name, and just hold it for, 6 months, a year, 2 years. Like I think we'll talk about Bitcoin in a bit, but I think, Bitcoin's going to be a buy at some point, not quite yet. So maybe we talk about macro and what happened with the Warsh and the Fed and inflation and rates. So this wasn't like you asked last week, like, what do we think about rates? I had no opinion because we hadn't had the press release. Warsh is too new. Now he's come out. To me, it's clear that he knew he needed to put a wet blanket somehow, and he could either hike short end rates, or he could be hawkish to get long end rates down. And I think that's what he opted for. I think he basically said the right things so that long end rates would go up, and it just puts a damper on the economy, on euphoria. And, you saw credit spreads widen. So I think he's trying to achieve the same end result by pushing long. I don't know if I was on mute there for a sec, but yeah. So now what does that mean? Did they want to walk the market down a bit now? Like, do they want another, like we're already down what, 5 or 10% on the Nasdaq. Do they want another 10%? Before they can start cutting rates and being dovish, because there's no way we actually get inflation down to 2%. He knows the Warsh knows it's here to stay. So my thinking is that says the right things at this meeting, says the right things at the September meeting to put a damper on the economy in order to get inflation down, and then he can be dovish, which isn't what would be optimal for the midterms. But these are the two competing forces. It's like, do you optimize for getting reelected, to winning the House or keeping the Senate, basically, is what the Republicans are trying to do, or do you fight inflation by doing what he's doing? So to me, this all flows. Okay, if he's trying to put a damper on markets and the economy, then okay, it's going to be super volatile. Like maybe you keep some dry powder to buy lower potentially. Like I think you just kind of DCA in your favorite names between now and the end of the year, because it's not I don't have a high conviction that the markets are going to go up, but at least you can feel comfortable in certain names, like we mentioned, Google or commodities or something like that.
Yeah. What I don't quite understand about like what's happening with the Fed is like if they really wanted to bring like the market and inflation down, they should have hiked, right? Like that would have killed animal spirits. That would bring inflation down most likely, even though mostly seeing energy-driven inflation, which is just a consequence of the Iran conflict. So it's that's my problem with the administration. It's like so all over the place. Like honestly, it doesn't really make sense. Like you on one hand you want to kill inflation, but then the inflation we're seeing is just mostly from oil. And why are you reigniting the conflict in with Iran? I just don't quite understand what's the plan here. Like that's my issue.
Yeah. Mike, what do you think?
I think it might be the way I read it is there is sort of like these midterms, and I think there's competing forces at play, right? There's some form of like politicization in terms of what's happening, and I think that's sort of what's strictly just playing that in terms of like going for a hike. They also could just be a situation where maybe it's like sort of a last resort in terms of in the market where they of dealing with that instead of proactive, preemptively, making the move. So I think it's sort of like part of both. We did also see some dissent. I think of dissent in regards to just what happened with the FOMC. So I think that is also going to be, I guess like introducing a little bit of, I guess like a bit of uncertainty going forward in regards to what's going to happen. And it's probably going to be like an equal catalyst in volatility in the market in general. As we move into sort of like, midterms, there's going to also be this sort of like overlapping thing in regards to, what's going to happen with the Fed. And also, I think it's been a while since we've had so much attention in regards to just a meeting, like just what happened with Citadel and, how much that moved the market. And the fact that there was like a decent probability that there was going to be a hike. So I think that was sort of like the market. There is a little bit of attention here that this is sort of like something to keep your eyes on, and maybe some form of like longer term concern whereby, if something happens in like with the FOMC, there's a rate hike, you're going to see like a very aggressive sell-off. I think people are already a little bit antsy in regards to, holding risk in general. So I think that was probably the most telling thing that I saw with just this week around Fed rates.
Yeah, it kind of shows you how the psychology in the market has slowly shifted over the last 1 or 2 months. I think like a quarter ago, like a quarter, like right after like the Iran conflict supposedly ended, like no one would have cared about rates. Like I think they could have hiked. Like we would have sold off for like a day or two and then would have just jumped back up. But now, I think people are getting exhausted. I think that's what it is. Like, a bull market usually doesn't die when, there's like bull markets die of sort of like when people are just getting exhausted from playing it, playing the markets. And I think we're slowly getting to the point where like people are just tired of the euphoria. Also just like overall, like the markets like has come down a little bit. People are just overall, there were some bears, like some public bears out there, and a lot of people just sitting on a lot of unrealized profits. So when you combine that with some concerns that the Fed might hike, that's kind of the outcome that you get. Like, so I don't know. It's the one thing that I don't really, I don't know, that I don't really get, like, is you remember when Trump got elected this time, and he put Bessent in place, and like the first thing that came from Bessent was sort of this, this primary goal that he had, that he wanted to bring down like the rates, right, and kind of to lower the interest expenses that the United States has to carry. And now we kind of look back, and like rates are higher than when he started. Like it's kind of the thing with this administration. You kind of like everyone listens to them really well, and like the market just like reacts to whatever they say, like way more than any previous administration. But then when you look at the end results, it's almost random at this point. It's kind of like you can trade what they're saying, like on a very short-term basis, but then in the long run, it's in the long run, politics don't matter.
Totally. Yeah, I think that's a good observation about the exhaustion with the Iran story. I mean, it's like there's real stuff happening there, but as it relates to markets, I think we're all just getting numb and inoculated to it, and you're seeing just like price react in a less and less extreme way. Also, just like there's only so much more Iran can do, right? We're slowly kind of the West is kind of wearing down their resources as well, and we're working through each time you take someone out, they replace them, but like the 10th guy is not going to be as impactful as the second guy. So I think Iran, the story is actually going to meaningfully continue to fade throughout this year. And it's still stuff's going to be happening on the ground there, but we're just not going to care, unfortunately, for better or worse, from a market's perspective. So I guess that's to take that for what it's worth. And yeah, I think you're right. Like you have to look through what folks are saying when it comes to politics. So now I think we can now put all this together. If the Fed is trying to tame inflation, and they seem not willing to use rate hikes in the short run. They didn't hike this past one. I don't think they're going to hike unless they absolutely have to in September. So I think they're going to use the long end as their tool. And so I think that's going to be a headwind for risk assets. And I think that's from SK Hynix down to Bitcoin. So what does this mean? I think you can probably hide out in certain assets like your favorite AI mega caps and your favorite physical or digital commodities. I think you can start DCAing, gold, around 4K, Bitcoin around 60K. But I think if Warsh gets what he wants, and you do get that 5 or 10% additional correction in the Nasdaq, that's probably how you get your final crypto capitulation, right? We've been talking for a few weeks, like what gets us to 50K or 55K. I think that's what it's going to be, some kind of like Nasdaq move, I think. Or just another leg down in what we've just saw, right? Like another Leopold gets taken out. So I think one of those two things is how our buy limits get filled at 55K. That's where I have mine set. I think that would historically, seasonally, would take place sometime September, October. That's kind of still my mental model. And so I'm sitting in almost no crypto, just some long-term Bitcoin holds that I don't even think about. But yeah, I like things that have already gotten completely whacked and now have had a cool-off period, like gold. Gold has just gotten like destroyed and now has kind of digested that. SK Hynix and DRAM and these kind of memory stocks, I think they're going to need some cool off period, most likely, is my guess. So how do you play this? I think you want to have dry powder. You want to be ready to buy liquidations. But I think, like, you know, I think there's still going to be entry points for long-term holds in stuff like Bitcoin and Nasdaq.
Interesting. Yeah. Yeah, it's difficult. I mean,
Yeah.
you kind of
super difficult market. One of the most difficult markets I've seen in a while.
Yeah, it's funny. It's kind of one of the most difficult, but also the easiest when you kind of pick your spots. But yeah, it's because it feels like whatever you own, it's probably gonna pump at some point. But yeah, you just kind of need to have the patience to sit through it. But yeah, I mean, one concern I have with Bitcoin is sort of the general lack of investor interest in the asset class. I think that became like even more pronounced than before, like this week, when we saw like this huge rebound in tech yesterday, and Bitcoin was just doing absolutely nothing. And it seems like no one is actually looking at this thing anymore, which is like a bit concerning. And I just kind of wonder who could be like the next buyer of this thing, because I think the general like bull narrative is we're going through like this institutional adoption sort of thing, and like the buyers are just gonna like show up, and it doesn't look like it. And it hasn't looked like that for a while, and so I kind of scratch my head and think like what's gonna bring this thing back. My biggest concern is that the last time like Bitcoin has sort of organically rallied was kind of during COVID, like when rates were at zero. That was kind of like the one time,
like sailor free.
Yeah, sailor free. No Ponzi work. So my concern is that like Bitcoin can only rally, like the only macro conditions that can make Bitcoin rally is like zero interest rates, and like stimulus, like big stimulus, like money printing. That's my concern, because like all other markets are doing really well. Bitcoin is not. There's animal spirits out there. Like Bitcoin doesn't care. There's just zero attention on this thing. Now all the DATs, Sailor, etc. They have tapped out. They're not gonna come back. There's just no way for them to come back. So kind of gotta wonder, is Bitcoin just gonna do nothing, like just keep doing this painful grind down until we get like zero interest rates again?
Mike, thoughts? Bitcoin.
No, I mean, we've been speaking about how Bitcoin has a lack of narrative for weeks, this whole year probably, and I think we saw a lot of evidence of that again this week with what happened with semis, and you can also obviously see it in the chart. yeah, I mean, it's just about figuring out like where the catalyst is going to be. I think right now, at least, it does seem like, you know, Sailor, I think this week they had what's this, their earnings strategy, and they've indicated that they're not going to really be trying to increase exposure. It's about sort of like reducing exposure. So I mean, just another telling sign of just how it's going to be a bit like, you know, tough in regards to BTC. But I mean, at least I guess like structurally, it doesn't look terrible. It doesn't look like I mean, obviously if you look high time frame, it looks terrible, but it's not completely over. I think it's just, you know, being patient and waiting for the next narrative. But you know, as Alex, yeah, with the zero rate, that's a very tough. Yeah, that's a very interesting one to see play out, because if that is sort of like what BTC needs as a catalyst, like then, you know, we're not going to see a bull market anytime soon. I think there's a lot of sort of like headwinds. But yeah, I mean, how do you sort of play it? I think, you know, you've made a really good suggestion, just sort of waiting to sort of like buy any dips and allocating. This is a great time for that, and allocate. And yeah, just sort of like wait for, you know, volumes to come back, and, you know, take it. For now, it's like, you know, look at other markets. I mean, even if you look at, you know, hyperliquid, you know, the most exchange assets, you know, like this week, the highest open interest is, you've got majority of them outside of Bitcoin, but majority of them are sort of like your stocks, your SK Hynix, Samsung, SanDisk. So I mean, even I guess like Bitcoin has really like chased even like crypto traders away to you know, trading stocks, which yeah, you sort of makes sense. But yeah, very, very difficult. You know, BTC to sort of like momentum. Right now, it's not really showing anything. And I think this week, some.
Yeah, I think, you know, as traders, we sort of have to you know, live in the present, but also live in the future to some degree. And I think it's always like a good exercise to think about like what could be potential catalysts. Like you know, back in 23 when the when BlackRock announced their filing for the Bitcoin ETF, like I was able to immediately jump on that trade at like 25K because I still had it in muscle memory, like because I thought about like what could be potential catalysts that bring this thing out of this very deep bear market, right? And like one of the things was like an ETF, like a spot ETF. So like when you do this exercise now and think about like what could be potential catalysts that can bring this, you know, bring back momentum into this market, bring back the institutional bidders for Bitcoin. Like one of the things, obviously, I mentioned zero interest rates, QE. I think potentially something like trouble with like a larger banking system, like namely the US and maybe the European banking system having issues, like a banking crisis. I think that's a unlikely one, but that's another one. Can you think of any others?
Well, banking crisis. Last time we had one of those, Bitcoin pumped.
Yeah.
Remember
SVB,
Silvergate, right? So you never know. It depends what kind. Because you know they always get bailed out. Money always gets printed. I think that it could be the left curve in me wants to say that if you get prices low enough, then you get all the crypto natives who sold at the end of last year just start to buy in, right? Yeah, I think you get enough of a discount where you get all the, you know, you get a few billion of crypto native capital to just, you know, bid Bitcoin in the 50s, Now you're getting momentum, you know, from let's say 55 back up to 70. And maybe that momentum looks good enough and the kind of seasonality looks good enough where that momentum then brings people in. Right. So it could be as simple as that. You may not need, and then we'll look in the rearview mirror and said, oh, it was because of A, B, and C, fitting a narrative to it. So yeah, I think that's actually my base case, is that it's going to be as simple as that.
Interesting.
And that's why I'm waiting. I'm waiting for that, for, you know, kind of that moment where the crypto natives are enticed back in.
Yeah. That's the thing. I think you can get decent rallies in a bear market without any sort of narrative. Think back, like when was it, 2019? Like we had like a massive rally from like where was it? Yeah, right here, from like 3,000 up to like 14. And
Yeah.
like there was no real narrative. I think there was some talks about what was it, like Facebook Libra back then. That was our narrative. But nothing adjacent to Bitcoin actually. So
I think that was literally just like Fourier cyclers who were like, okay, like the calendar says to buy, they bought. COVID happened. We thought everyone was going to be locked inside forever, and then that caused that like liquidation down. And then the money printer turned on, and then we absolutely mooned with those God candles there in late 2020.
yeah.
So yeah, I don't know. Like, what do you think about that? Could it be as simple as that?
I mean, I know from some insiders actually, like 2019, the pump. I remember really well because I got liquidated on that pump because I was short.
You're right. It turned around mid 2019. So
yeah,
it couldn't
like
have been
April
anything
1st. Funnily enough, that's when the pump started. Like right here.
It was such a small controlled market back then, though. You know.
Yeah,
like,
and there was actually a like cartel that
for sure.
I think it all started with like 100 million spot market buy on which was like very coordinated because they kind of saw like how like too many people were short and just like just squeezed it out. But yeah.
Yeah, the market's now 20x, and now there's ETFs.
Sure. The thing is, you still need. What I wanted to say is, you can rally without a narrative, but what tends to happen when like you rally out of a bear market without a narrative is you stall at some point and then like give back a lot of the gains, because yeah, it's still a bear market. There's no real reason for people to sort of keep holding the risks, and you sort of stay in this like traders market sort of mentality where, you know, high prices get sold, low prices get bought, that sort of thing, like range bound price action. So especially for like an extremely self-referential asset like Bitcoin, like crypto, you just need like a narrative to sustainably rally. And yeah,
I don't know, call me jaded or whatever, but like I think that we'll just make up a narrative. Like, we'll, you know, like whatever price, like we'll get enough of a discount, we'll get a bounce because people step in, and then there's momentum, and people will say, why is there momentum? And a bunch of ideas will be thrown out. We're going to use Bitcoin, is going to be the currency for the moon. Bitcoin is quantum proof. We're just going to make something up, and everyone's going to hold on to one of those and say, all right, this is why we're going from 70 back to 100. And I don't know.
Yeah. You actually mentioned like a good catalyst, like just some developments on the like quantum side. I think that would help.
Yeah, exactly. It would help for sure, but it wouldn't explain like a 50% move, But I think people will say that's why.
Yeah, I mean, if you get some developments and like that's always the most powerful combination, like good price action and then some actual fundamental developments. You don't get that too often in crypto. So yeah, I mean that would be good. Like go down to the 50s, price comes back, and then maybe the Bitcoin devs do something for once, and we get some quantum proof. That'd be great.
So, some country buys it, some Mag 7 country buys it. Just like the world central banks are gonna run it hot for a couple years. I don't know, right? Like something. All right, so let's now. The last segment of the show is just our two favorite trades. We'll go around the horn. Start with Mike. Put you on the spot. Our two favorite trades could be an arbitrage, could be a carry trade, or it could be 10x longing, a memory stock.
Yeah. Gosh, I don't think there's. I mean, it's very difficult to pick. I think you're just looking to somehow get short ETH for. There's some form of like euphoria around memory stock. So I do like that. I would also say like if you don't want to like go for direction, I'm more about sort of like just harvesting funding. These products are still heavily leveraged, and there's still a lot of interest on them. So if you want to sort of like be delta neutral and not sort of pick where direction, I think that's quite attractive. I do hear some murmurs about ETH, so just based on like there does seem to be a little bit of excitement there. So E2K, how many times have we been that? So maybe sort of playing like some form of like mean reversion to the mean of ETH, which is 2K, would be interesting. So I'd also say that. But yeah, I mean, off the top of my head, I think there's not a lot in regards to that. I think just monitor where the interest is. I mean, there's a lot of allocations happening, and I think people are looking for the next sort of like bet or trade now that you sort of like memory stocks have cooled down, and I guess like Mag 7 is looking more attractive, and I think capital is going to be looking for a place to go. So just monitor which is going to sort of be the new shiny toy over the next couple of months, and then sort of like ape into that. Yeah.
ETH is interesting. It feels like some of the big traders on crypto Twitter, like a lot of them have flipped bullish ETH in the last couple of days. It seems like I think high stakes cap, some other ones. I wonder why. I think everyone is just sort of looking at the relative strength against Bitcoin. I feel like it's just Tom Lee. I think just Tom Lee has like found some dry powder somewhere, and it's just it's just supporting ETH in a very illiquid market. But then when you look at the chart, it's I mean
Pull up
to
ETH,
write home
ETH
about.
BTC, please.
Yeah.
Let's see. Okay. But like, I don't know.
I mean, it's
I could
it's like,
see I could see another leg down to, you know,
yeah, I mean, it's a 15%
0.023.
It's not
like,
that impressive.
Yeah.
Yeah, this on the weekly. I mean,
Yeah, come on. Yeah. I wouldn't. Not that like you trade this, but like, yeah.
no, but it's I think it's a sign of the times, right? And
Totally.
when folks see like this sort of move, like getting all bulled up on
Yeah.
Ethereum.
Yeah, it's like the Wojak meme, like, oh.
Yeah.
Yeah, I don't know. All right, so to me, this is just like random stuff happens in the bear market. Like, remember Pepe in the last bear market? Like, stuff just pops off, goes away. Yeah, I probably sound like a broken record here, but of all the assets we talked about right here, I probably feel the best about gold because it is more immune to everything, all the kind of headwinds that we've talked about compared to others. It's not completely immune, it's just more immune, and it's already consolidated. It's at a major resistance level here at 4K. This is controlled by China, by the CCP and their central government. And yeah, it's not like what is the US or the Europe buying. This is what China's buying. And yeah, I think you can make a nice run back to 5K. In like the, I don't know, maybe by the end of the year. I don't want to make a time frame on it. This is like more of a longer term hold, but I think I'll make the call 10K by 2030. So it's an easy 1 to 2x here, or sorry, 2 to 3x from here. So that one I like. It's already taken the pain. It's already and this is in contrast to the AI high flyers, which had one liquidation and could easily just have another next week. And yeah, let's see. So Google was my trade last year, or last week, sorry. And
before you say that, like on gold, what do you think? Like, I agree with like probably China's gonna drive this thing back to 5K and higher, and obviously the other central banks. I think we need one thing to happen for for the central bank buyers to step in like meaningfully again. That's probably like low oil prices for longer, because lower oil price, like currently I think a lot of the emerging markets, they have to sell some of their gold reserves to to buy energy essentially. So that, I think that's been weighing on gold prices. And on top of that, you have sort of a stronger dollar recently, and that's basically also just linked to inflation and oil prices, right? And like higher yields, stronger dollar. So I think if we get like oil prices consistently back into the 60s, that would just be like a prime setup for gold.
Yeah, I think so too. I don't expect those sales. I agree those sales are happening and are going to happen more. I don't think it's going to have as much of a weighing on price just because it's like, it feels like a drop in the bucket, but that's something I should look into. But yeah, the support levels here, I think the people who track this closely, you look at the support levels in RMB, in the Chinese yuan, and it ends up being like, it's actually not like round numbers in dollars. It's like 42 and like 37 or something like that. I forget. Yeah, let's see here. See if you can pull it up. But yeah, so I think you want to be ready to buy more, is my point. And I don't think like 4 is the actual exact support here. I think that you want to basically be ready to buy kind of maybe a bit lower. But I've already been buying a lot of gold here, and ready to add it if it goes any lower. The other trade, yeah, let's see. Were you able to? It might be too tough to do.
Yeah, I think
Chinese yuan.
saved it somewhere. I'm just trying to find it.
Yeah, it might be. It might. Yeah, they might have it preset, but yeah, it's like a bit. It's like a bit above 4K and a bit below 4K are the kind of two round numbers that that have held it as support. But look, I'm not a technician here. The other is Google. I'm going to say Google again. If you don't have it, I think you want to. I think like I'm much more comfortable here than Nasdaq. Google is kind of left for dead. Everyone freaked out unnecessarily over the last week or two, and as I talked, I think a lot of the value is going to accrue to the app layer, and these guys own the apps. Tesla, the car, is an app too. I think that's another really strong play that hasn't had as big of a bounce compared to Google here. So I think either one of these things, but yeah, I think Google does not need to have the frontier model. They just need to own the apps and the customer. They have the hardware, they have the data. I think this is going to be a really strong play. And yeah, it's something that I'm comfortable hiding out in, at least until the midterms.
Yeah, I like Google. It's, I mean, I do have some concerns as when it comes to their search business. There's and just future profitability, but they just have such a strong mode when it comes to just how much data they have about like every one of us. That is just hard to imagine them going away anytime soon.
Yeah. How many times have we counted them out, right? And again, like the models are going to become utilities. They're going to become commoditized. The models themselves. A really good analogy is actually crypto. I think it was Tarun from Gauntlet had a good analogy that like the L1s are like models, and like what is it? What was that thesis? Like the fat
protocol thesis.
Yeah, the fat protocol thesis was wrong. It's the fat app thesis, which was true. And I think that's what the AI is like speed running that whole thing right now. It's like everyone thinks that the underlying protocol is like the most valuable thing, and Anthropic and OpenAI are going to the moon. These are trillion-dollar companies basically, and but really I think it's going to be the apps and other parts of the ecosystem. So that's why I think I'd way rather hold something like Google than Anthropic here.
Yeah. that's for sure.
Yeah, and just look what happened with Kimi K3, right? We have a Fable level model that you can run locally. Now it's extremely expensive to do that, and that's like an overblown narrative that someone's just going to run that. But yeah, like I think we've hit a major turning point, and in like AI is going to continue. I think you want to own the apps, the data, the hardware, and Google just happens to be a leader in all three of those. And yeah, they're going to have like good enough models, but it doesn't matter if they have a Fable level model at all. I think that's like a false narrative.
Yeah, agreed. I guess like the only thing that can kind of derail this train is if we sort of go to much more like local inference sort of world. Like if you imagine like models become much more efficient, you run like 90% of your inference like locally, then you kind of have to like reconsider like all your capex on your data centers, right? Because like what are you going to do with all your data centers then?
I don't know, man. Like what percent of the population is using AI right now? It's like 2-3%.
Yeah, that's
right?
about it. That's what I mean. Like currently, yeah, I mean, I can run some really decent models on my Mac Studio, which costs like 10K plus. But in 2 years, you're probably gonna have that on your iPhone, and you're gonna be able to select like whatever model you have. Like there's gonna be some default model installed locally on your phone, right? So I actually think like Apple's bad by not investing into data centers, not investing into any sort of model development. It's gonna pay off like big time. Just do nothing and win, because I guess probably accidentally, they kind of chose the right path, which is like local inference. Like we're gonna build the hardware, just gonna have strong chips, efficient models on your iPhone, which is gonna do enough for like it's gonna be able to do like 90% of the stuff that most people want to do, and then for like the super complex, like deep research sort of shit, then you can run it into in the cloud and on like some super high performance model. Yeah.
Yeah, I think that's right. You shared a really interesting chart that was like the most common use cases for like guidance by AI, and health and wellness was at the top, and I think it was like personal coaching or whatever was like number 2, and yeah, like what struck me is that that's highly personal, and so privacy is going to be maybe like the main driver of things running locally. It's just going to be like, look, if this is going to be my therapist and see my health data, and I'm going to talk to it about my family and my kids and my spouse and my weight, I am not going to like send that to Dario and Sam and Elon. All right. I want that running locally. Same thing as, yeah. Everyone, I don't mean like absolutely, like there'll be plenty of people who just won't care, in the same way that we save our pictures, in iCloud or in Google. So, but yeah, I think I can see, yeah, exactly. Yeah. I can see the, like all of these really, you can make the argument that you don't want that data getting stored somewhere and sitting in a honeypot getting hacked one day. It's just, this is information we've never put out there on the internet, and there could easily have a reverse. Now, all that said, it feels like there's going to be an infinite demand for compute, and we're just going to keep, like coming up with new demand, right? We'll lower the cost 10x, we'll lower, everything will get more efficient. It just feels like there's going to be an endless demand for compute, and that we won't have any data centers that won't be at full capacity, at least on Earth. That's my sense. So I think, and look, even if that's the case, okay, worst case scenario that happens, I think Google is still very well positioned, because they own the customer, and they can figure out how to monetize once you own the customer.
Yeah. I mean, same like Apple probably, right?
Yeah, exactly. Same thing. I think Apple and Google are very, very well positioned, by owning the hardware and the apps that are in people's hands all day.
Yeah. It's actually sort of bearish, like meta, I would say.
Yeah. Yes.
Because
from that perspective.
Yeah, from that perspective, and it also feels like we're kind of getting to the end point of like, not the attention economy, but but a little bit. And I think a lot of like Meta's platforms have just become like no one actually wants to use any of their platforms anymore.
Yeah.
Like Facebook is dead. Like there's literally only boomers on there. Like
Yeah. Totally. Yeah.
Instagram, same story. Like
Yeah, Instagram has turned into, it's almost like, I'm just making up this analogy. It's almost like all the refined sugars that was in every food we bought like in the 90s and 2000s. And now we're getting, now a lot of that stuff is getting removed. Like Meta's like junk food. Instagram turned into absolute crack for teens and adults. It used to just be my friends posting stuff, and that's how I keep tabs. Now it's just like bombarded with ads and TikTok like content, and I'm almost going to be done with it. I'm kind of like close to the end. So yeah, what else do they have? They don't have, like, Threads never turned into anything. Facebook is all boomers and like AI content, and Instagram just turned into TikTok. And I don't know. Now I know that Meta ads do really well. I know that businesses, but that's for now. Yeah. So I don't know. Yeah, like the metaverse, the VR never turned into anything. So like I don't know. Yeah, they don't really have any decent models like at least Google does.
Yeah, though they spend so much on them, right?
Say again?
Like they spend so much on like model development and like hiring all these like top engineers, but somehow they didn't really deliver.
Yeah, you need to be the kind of place that top talent wants to work, right? You can't just throw money at the problem in all cases.
Yeah, I think Meta is terrible at converting capex into returns, or I think just seeing that with what they did with the Meta, but they're really good at that. So I think that's like one of the parameters I'm using to judge, where to, allocate capital over time. It's like, how good are these guys at, converting capex into like actual returns? And as you guys were saying, Meta not so good, Google incredible. So it's like, hey, you want to sort of like allocate there. But I mean, just also looking at the names that are able to do that, like, where's all this capex spend? Like, who's going to actually turn all this capex spend into sort of returns that has been put, like, outlay, basically. Yeah.
Yeah, very, very well put. I think should we I think that's a good place to call it. A lot of good trades here.
I couldn't do my trade picks, man.
Oh, you did? Oh, I thought you did. Okay.
Okay. I just have like two quick ones.
Okay.
Last one saying like last week on Monday, German stock index. I don't like the German economy. I don't like German politics. Europe is fucked in general, but this is a really good chart. We're about to break out to new all-time highs.
Interesting. Yeah, we looked at this.
Yeah. Euro is also getting a little bit of strength back, which kind of tells me there's some capital rotation going on from the US back to Europe.
It's Euro summer.
Yeah, I mean, it looks good. It looks good, and it's been consolidating for a very long time. So could be a strong breakout. And the second one is Circle.
Whoa.
Mainly because we are trading at the lows.
Where was the IPO done at?
Was it? I think it was
20?
I think it was 40 something, 45 or something.
I thought I remember it. Yeah, okay, maybe. I thought yeah.
Not 100% sure.
Okay.
But yeah, it's trading at the lows. I don't love the company. They're not exactly like super profitable or anything. But they're trading at the lows. Stable coins are real. Stable coins have a narrative. It's the one vehicle that you can buy on public markets. to get stablecoin exposure, and it's trading at this very low price currently, historically. So why not give it a try?
It's actually a really good. I actually like this a lot. I'm gonna look more into this. But yeah, wow, I didn't realize it had come back down to its after wow, and like in the February dip, it's basically back there. Maybe that would be a slightly better entry, but yeah, it does look pretty good right here.
Yeah, and they have earnings coming up, so yeah.
I mean, the Coinbase earnings was not that great. It was like a third miss in a row. I wonder if Circle's going to be the same since the businesses are tied so tightly.
Yeah, I mean, like Coinbase, I think they've realized that there's problems, but I think it's going to take a while for Kobe to turn this thing around.
Absolutely, it's like a cultural thing. Yeah. I like that Circle is starting to be more institutional. I think they have more of an opportunity to do that than Coinbase does. So yeah, wow. Isn't it? That's a really interesting play here. The other ones to think about is like, I mean, all these crypto IPOs are like, the charts look the same, right? BitGo, Securitize. They look like a TGE basically. But this one looks like it's distributed at least. Yeah, let's look at BitGo. BitGo. Oh man, it keeps making new lows, I think. And then look at SECZ as well.
Yeah,
same chart.
I mean, Securitize, it's sort of a shit company. Like all they do is like issue a token for you, like nothing else.
Yeah, they're a yeah, right. And they do it through a transfer agent. They're going to get into fund distribution, which I guess they're already doing, but they want to get more into. Yeah, I don't love the model.
It's kind of the very lazy solution for like institutions when they want to like try out some like tokenization stuff.
Completely. It's a band-aid like way to toe dip, but it's hard to imagine that that's how things are going to be done, a year or two from now, once everything gets tokenized.
Yeah.
Yeah. Wow. I like those are two good trades. I like those.
Yeah, Circle looks interesting.
Circle looks very good.
Probably good time to buy ahead of earnings. Maybe with some options.
Okay. Yeah. Sorry. So what's a good options play for Circle, given that they have a chain, or options chain, for clarity?
I would have to look into it. Give me one sec.
Would it just be like a bull spread?
Yeah. I mean, I would. You probably don't want to buy options which are like very close to the earnings, like not any expiry, like within earnings week, because like historically that just just overpaying. There's a premium.
The expensive, right?
Yeah, but I'm guessing like implied volatility must have come down quite a bit. So just pulling up.
Yeah, it does look. I would guess IV would be on the low end. Just given vol is so low across the crypto market overall. Speaking of these kind of names, I sold most of my Robinhood at the end of last year, and I kind of sold the rest of it throughout the first half of the year. And I don't love it. I don't know. Like I don't. The stuff on Robinhood chain feels forced.
Yeah.
It feels like base season, it's just like, all right, like the numbers are like out of control, of course, but I don't know. There's no way that's organic. It's probably just people farming some kind of Robinhood coin or something or whatever, or they're just getting paid to do it. But Circle feels like a different situation here.
Yeah, so we have the options chain here. So yeah, 100 IV. It's not exactly cheap.
Okay, I was wrong.
100 IV with like
our instincts were wrong.
Like this chart here, like it's done nothing over the last month, but still IVs and hundreds.
Do you think that's because of earnings, or I don't know. All right, so maybe options is not the play.
Maybe I mean, maybe a call spread, or like a 1x2, so you can sort of harvest, like you buy like an at the money and then you sell like to 20 delta calls or something against it, premium neutral. You capture some upside, and if it doesn't go up, then you can just capture some theta. That'd be probably interesting.
I know, but if we just said if Bitcoin goes to 50, 55K, I feel like that stock's going to get put to us, right?
Yeah.
Yeah. Okay. maybe we just be less degen and just buy spot.
Yeah.
We just buy spot ahead of earnings, just plain vanilla.
Yeah,
Michael,
it doesn't feel like there's much downside here anyway, so I agree with that.
Mike, what do you think? Circle options here or just go spot?
I'm surprised that the IV is very high. So I'm actually like bearish. This sort of like cheap, expensive IV, and like it's not really bullish, but like I think this is a great like vol harvesting trade that
maybe just sell. Yeah, maybe that's the thing. You just sell vol here.
I'm so surprised that the IV is trading hundreds. But it moves really aggressively. But yeah, I think with crypto, with no narrative on crypto, it's like, it does seem quite attractive to like sort of short like this type of stock that's really closely related to like the trading volume that you'll see on spot. Like this is a great opportunity in my opinion, just like from a vol perspective, just like shorting this high IV vol, very low realized, underlying that it's in tracking is very like like really not moving much. So I think that's sort of my opinion. But in terms of direction, maybe buying like three year out calls on Circle and just hoping that this thing like BTC starts moving again and there's interest. That's like sort of my thesis there.
Yeah, really good point. Yeah, you probably just want to wait for like the earnings, see if it moves. If it doesn't, then just sell vol on it.
I mean, just gotta go there. It's
all right. Wait for earnings, sell Circle vol. I like it. All right, boys. That is it for this week. A lot of good ideas. A lot's happened. Looking forward to the next one. I'll see you guys.
Thanks.
Cheers. Bye.
Bye-bye.
Bye.